Hi, welcome to my video. This is the Trading Pit, personal investing tools and techniques for the individual trader. Please note, this is not investment advice. I am not a financial advisor, and past performance is not necessarily indicative of future results. You can lose money trading. Today we're going to do a price analysis, an Elliott wave analysis of silver. Elliott was a technician back in the 30s and 40s who said prices move in fractal waves. 5 primary waves in the direction of the trend, followed by 3 counter trend waves. So today we're going to be looking at silver weekly bars. Here's the last 1.5 years of silver price action on the weekly bars. And it seems like only recently, of March of this year, that silver has started to wake up to the fact that gold, its big brother, is trading at all-time highs. We see here on the silver weekly chart, I've labeled the 1-year congestion zone. It's in this rectangle here. It's going from February of 2023 all the way to March and April of this year, where you had a congestion between $22 and $28. But then in March of this year, something interesting happened. Well, actually, let's go back. Let's look at March of last year. I'll show you something interesting. We see March of last year at the far left of the chart on this weekly chart, a dramatic move up labeled with a green arrow labeled SOS. That does not mean save our souls. That means a sign of strength. This is a 27% move up in silver, $6 move up from $22 to $28. So that is a very good sign of strength. But where do you buy? Here I've labeled the buy zone on this weekly chart, projecting out the 1.5 years from March of last year. The buy zone can typically be somewhere below the midpoint of this move up, but ideally the buy zone would be around the high of the low bar. So you want to look at that red bar low back in March of 2023, and that's where price came to in actually October, and then again in February and March of this year. Something to note is at the March lows, you have what we call a 99%er. You have the big red bar down, making new move lows, and the very next bar is a gap up open with a complete reversal of sentiment. It goes above the prior red bar's high and makes dramatic new highs. That's a 99%er. That's a major sign of more buying power to come, and that's exactly what you had. So let's progress forward in time. We see the circled area, and I've put some labels on this, around spring of this year, spring of 2024. Price was trading around the larger buy zone of the March 23 low, but it was also in the buy zone of the October 2023 low also. We see the big red bar down and another 99%er in September-October range of last year. But then in the circled area more recently, we see a bunch of tails. This is where price action went down and came right back up. This can only happen if buyers enter the market at this point. And we can see here you've got 1, 2, 3, 4, 5, 6 tails in this zone, in this area that I've marked with the oval here. That's nothing but buyers coming in. And then at the middle of that, you've also got a foreclosed reversal and actually a spring, just noticing that. Prices went down, made new pivot lows, and then sprung right back up and closed above the previous 4 closes. That is a definite sign of strength here. And then you've had the valid breakout up, which carried prices up to the $26 level. Now let's zoom out and look at the Elliott wave analysis of this. Here again is the daily bars, and I've labeled the waves. You've got the waves up of 0 to 1 and 2 to 3 and 4 to 5. Note that the first wave, 0 to 1, pulls back just a little bit to 2, and then the second wave from 2 to 3 goes up steeper and farther than the first wave. But it also corrects farther down from 3 to 4. So that means you're getting towards the end of the trend, but then the wave 4 to 5 goes up even farther than the first two waves. But it takes a little bit longer. So that tells you that you've had 5 waves up. It's now time for 3 waves down. And these are denoted by negative numbers. Here you've got -1, -2, and then -3. The wavelength 1 to -1 is labeled in red with a red line, and that is projected forward from the high of -2. And you can see that the wave to -3 was a little bit quicker and also a little bit deeper. So that may mean we have more move to the downside, but I'm betting on an up move here. Let's zoom out a little bit and show something else. The red dashed line represents the Fibonacci 61.8% retracement level of the entire move up from the February-March of 2023 lows up to the June and July highs. And then you had the 62% retracement. I'm sorry, the February 2024 lows. So the move at the first half of this year, now we've retraced from the June highs, we've retraced 62%. Now I think we might be ready to test these highs at 33 with hopefully another 5 waves up. Of course, past performance is not necessarily indicative of future results. You can lose money trading. I hope you enjoyed this. I hope you've got something out of it. If you did, please like and subscribe, and let me know what you found helpful about this. Happy trading.